Good morning, everyone. Today I'm with Chris, and it's Jot myself here. So we're going to talk about Chris's experience over the past 20 years in the financial markets. Now, Chris is a veteran, and he's a trader and educator at Educated Trade, and he is a very integral part of our team. So we're going to dive straight in, and we're going to ask him insightful questions that can allow you to have insightful answers to it as well. So let's
Hope
start,
to
Chris.
bring that for you.
Do you want to give people a little brief about yourself?
Yeah, Chris Pollock, at C Volume Profile, you'll get me. I'm a head educator and trader here at Educated Trades. Been trading for near on 20 years now. I know I look good for it. But yeah, been through the mill a few times. We'll talk a little bit about these ups and downs throughout today. But yeah, still plodding away in the markets, mainly in futures these days. Due to the data, maybe we'll get into that too. Yeah, looking forward to answering some of your questions, Adrian.
Perfect. Let's not be around the bush anymore. Let's dive straight into it. So the first question I have for you, Chris, is what was the exact moment you knew you wanted to trade for a living?
Oh, that's a good question. So my history was, I did an economics and finance degree straight out of A level. So I was straight into kind of the financial services kind of, wheelhouse. At that point, that almost put me off because I was expecting to learn from that kind of practical applications to markets, and it really didn't do that for me. It was very theoretical, didn't teach me enough about the practicalities of trading. So if anything, that kind of turned me off financial services altogether, I have to say. Took a year out, and then there was a little itch in there that wanted me to kind of get back into this market a little bit. And yeah, it was probably a year away from the markets and away from finance that made me realize, no, I do want to do more in this, but I need to find something else that's going to get me to where I need to get to. So yeah, it was probably, how old would I have been, 22, 23 when I took the step. And yeah, since then I love the game. It's exciting every day. You're learning constantly, you're absorbing a lot of information, and you're trying to put that information into the market and capitalize with a few strategies that you need to be consistent with around your risk psychology. We might talk about a few of these things, but yeah, it was really kind of age 22, 23 when I fully committed.
Right, thank you so much for the answer. And truth to be told, I also started doing BSc economics, and then when I graduated, I wasn't really too sure if I would ever get into financial markets because it was just a very big dream for a small teenage boy. And then I did MSc in fintech, and then I somehow landed a job in a bank and worked my way up. I think we all just have kind of similar sort of experience, as I would like to say. So yeah, thank you so much for that. And I'm going to ask you the next question now. Now, this question is: what's the most intense day that you've ever had in the markets? The kind that you will never ever forget.
Wow. Well, I started in '06, right? So my baptism of fire was great financial crisis that kind of reared its head a year or two into my time as a trader. So that was quite a baptism of fire, quite an education. So I think that being the first one, that was the big one. I mean, the day Bear Stearns went, Lehman Brothers went, they were unbelievable days. And these sort of knocks that you get as a trader, because there was a lot of downside volatility. I was mainly trading precious metals at the time. We've been saying to our clients, this is the hedge against these sort of events. Yet gold got whacked for 30% during this period. So there was a lot of anguish, a few equity calls, margin calls for clients that are never too pleasant. After the first couple, you get the hang of it. But yeah, I think the great financial crisis was one. I guess newer traders have seen the same thing with COVID.
Yeah.
And even this year, we've had the Trump tariffs, right? And more so, a day I'll never forget was a day I wasn't even at my desk, which was Trump's U-turn on tariffs, April 9th. I was sat in a beer garden in York speaking to a friend of mine who invests a little bit of money, and he's the one who told me. He was looking at his phone and was like, wow, Trump's U-turned on these tariffs, 10% across the board. And I was sat there, head in hands, thinking, why did I pick this day to not be at my desk? So I won't forget that day, but that was not because I was there to feel it. It's just I saw what happened and thought, one slipped through my fingers there.
Fair enough. Well, I would like to say I think no other crisis compares to the 2008 financial crisis, because things were extremely different back then. Internet wasn't really a big thing. There wasn't social media. People weren't at home. They were all at their trading desks. It was a whole different environment. So it must have not just been you at your desk; it must have been you and hundreds of other traders as well.
Yeah, I was in a big place. There was probably 25 traders in there. Yeah, it was hairy, but we were in probably the right place at the time. We were trading metals. Granted, we were doing industrial metals as well, which were getting slotted. But yeah, the precious metal complex was destined to turn, and we've seen this at the bottom of 2008, the bottom of the COVID crisis. Normally, gold is the one that picks up first. So, if we get another one, maybe at the end of this AI boom, if it proves to not follow through, maybe if gold starts to turn around, then maybe you're not too far away from equity markets doing the same. That's kind of my long-term takeaway. Something I'll definitely watch.
Fair enough. According to some historians, they say these economic recessions they tend to repeat themselves every 7 to 8 years or so. So I think we might be due one soon. Let's see.
All-time highs, but yeah, don't short them. But yeah, we're in the zone.
Perfect. Now there must be some things that you must have learned from trading in that sort of environment in 2008 global crisis. So you were trading gold, you said, during 2008 crisis. What was it like to be in the middle of all of that chaos, and what did it teach you about trading?
So I was kind of trading other people's money at the time, so it wasn't my own book. So I guess that just in a way it's harder because you've got people on the phone asking questions, what's happening, why. You've got to kind of justify these markets a little bit. I mean, it was just, as you'll see with these crises like we had with COVID, it's just a big liquidity draw, right? They just sell assets, people selling gold to cover margin calls and other products. But risk management is key, right? And whenever there's volatility, and typically the volatility is higher, if you look at the VIX, volatility is higher when stock markets are falling. You've got two options, right? You can either trade with your similar stops, not advisable in my opinion, and try and gain really large risk rewards on the trades that you do catch, or you account for those larger ranges, wider stops, bigger targets. Bigger targets are definitely available in those sort of environments. So I think just adapting your kind of stop levels, maybe size down a little bit, would be advised, rather than just trying to hit the same entries with the similar sort of tight stops that I like to use. It doesn't work well in high volatility markets. So yeah, stretch them a little bit, but those big gains are available. So on a risk reward basis, you can get there and even greater rewards when you're there.
In order to get big gains, I would have to assume people would actually have to know what direction to actually trade in.
Well, it's fairly clear in those environments, I have to say. Just got to be patient.
Tend to just do the opposite sometimes because of just how misinformed they are. Any tips for people that you would like to tell them as to how to interpret news, and should they be a part of it if they feel too chaotic, or should they not even trade?
Yeah, the Trump situation this year was like this a little bit for me. I got my ass handed to me on a couple of days, but the key is to just walk away, right? If you're hitting your risk per day, just because of some other people in the office are maybe making money that day, it's very easy as a new trader to get dragged in going, no, there's money here for me, there's money here for me. Before you know it, without experience, you could be doing some real damage if you're not catching the moves. So trying to silence the room, it's hard in a trading floor like this when you have other traders, some probably doing well, others maybe not. And those who aren't, looking around the room, seeing people whooping and hollering can be quite difficult for new traders. You get that FOMO. But walk away. If you're hitting your risk limit for the day, just because it's a volatile market does not mean that you're guaranteed to make money. This is kind of the reflection that I do have on that April 9th rally. I'm looking at it going, this must be the easiest move in the day. There's a chance that I'm long and I get stopped out on every trade. So I'm at peace with it almost a few months later.
So basically, if you don't know what you're doing, just don't bother trading.
In those environments, you got to be super careful. In general, if you don't know what you're doing, learn before you trade live money, demos, education. You'll be unlikely to naturally make money as a trader unless you have some strategy to it, with your system, your entry and exit strategies, your risk management, and how to get your brain in the right place. These kind of three pillars are non-negotiables to a trader. Without all three, you're going to struggle.
Perfect. Thank you so much for that, Chris. Now you mentioned something about fear of missing out, and with fear of missing out comes panic as well. So most traders panic when they see their investments or trades, very close to their stop loss. So how do professional traders stay calm when things get really ugly?
Yeah, managing mindset is difficult, I would say. It's probably the final frontier. So I mentioned those three pillars. Having a strategy, doesn't really matter what that is. Then you've got yourself risk management, which should be pretty hard rules. I know Exakota said that, every trader should trade by their rules and make rules, trade those rules. but then know when to break those rules. So it's kind of an oxymoron, really. But yeah, having this kind of approach, I think, is really important. So yeah, mindset is the final bit where that can twig. Even if you're good at strategy, you're good at risk, your brain can kind of get the better of you sometimes. So just having you don't want to rock into an office on a busy day with a hangover, or having not been to bed, having made a chunk of money the night before. You need to be pretty, not zen, but you don't want to be overconfident, nor do you want to be down in the dumps, feeling depressed about your trading. You just kind of want to come into every day pretty placid, pretty stoic. That at least creates the foundation for success. If you're, feeling like you've been beaten up recently, you're more likely to have that snake bite effect where you're reluctant to put trades on, potentially, or revenge trade, even worse. And if you're elated as a trader, then a lot of traders' worst days follow their very best days. It's that casino money, kind of house money effect. So just trying to keep yourself in a level zone, I would say, is important every day.
Right. So also one more question is, so definitely, like you said, mindset is extremely important. Is there anything in particular that helped you get your mindset to a level that has allowed you to stay in the game for over 20 years now? Like reading books, meditation, mindfulness?
Yeah, I would love to do more meditation and mindfulness. I know Enzo in here is our kind of psychology guru, and he's all over this sort of stuff. I do little bits, but I could do more. It is a good tool. It is very good for your brain to do this, just to keep that calm. I find exercise for me is one that kind of suits my personality a little bit. It's a little bit more proactive, and I find that without doubt improves my trading. So yeah, and even especially like cardio, right? Your systems are built to your cardio system. The healthier that is, the better things are going to get around your body. So it's going to help you, right? If you're taking all the supplements that people take these days, without good cardio systems, it's not delivering to the brain in the same way. So especially cardio, I'm sure I could do a bit more. Yeah, I think that's good.
But we love cakes too, so.
Well, yeah, luckily I don't have that vice, but I have a few.
Fair enough. Now, so you said cardio, you said mindfulness practices. Now, there's one thing that you guys shouldn't be doing is watching Wolf of Wall Street and do things that they say. So don't fall into the wrong trap. Do the right things. Go to the gym, sleep on time, have a routine. Right. So these sort of things are going to help you as a trader.
Yeah, we're not promoting cocaine in this office.
Absolutely not. Not on camera. Right. Next question. So what's the biggest myth about trading that you wish people would just stop believing?
Social media platforms are very targeted towards a lot of get-rich-quick sort of strategies or sales pitches. You see a lot of young guys and girls in front of Lamborghinis and maybe AI-generated private jets. And this is not a get-rich-quick scheme. It's sold by many as that. This is a get-rich slow and consistently scheme. So to have a kind of change from doubling accounts, flipping accounts, getting huge gains into more of a slow and steady wins the race mentality. Because the aim of the game in trading every day, the one thing you can control is to not blow your account and to not do too much damage. Whereas if you are gunning for huge gains all the time, you are vulnerable to those big drawdowns. And avoiding drawdown is probably the most important thing in trading. So trying to get people to move from making tons and tons of money very quickly, if you can get a system that's consistent, the compounding effect of trading is incredibly powerful. Even at 50% a year, you can become, even with 10 grand, 11, 12 years in, you're into those 7 figures.
Yeah. I think it's all to do with people have certain expectations based on social media, based on a lot of things outside of their control. And once they fall into that sort of trap, it's just a downfall if they do get into trading for those particular reasons. So in order for you to stay consistent or be in the game for longer than anybody else, the best thing that you can do is look at trading as something which is a business. A lot of people think it's just a side hustle, it's just something that they can just come in and start making money from day one. Possible, but likely for you to have longevity, maybe not. And it's all to do with you having to manage your own expectations. And even with you, right? So you are a successful trader, but I don't really think you will ever go down the path of spending cash for things that doesn't really matter to you, like driving Lamborghinis, Ferraris, and going on expensive holidays. It's just money management.
Holidays are my vice. Yeah. I'm not a car guy, luckily. That saves me money. But the money you have in your trading account is directly proportional to the amount of money you're capable of making, right? If you've got a 200k account all of a sudden and you take 100k out to buy a fast car, all of a sudden your earnings potential has been half.
Mhm.
So yeah, you don't want to be drawing tons and tons of money out of your trading account unless you absolutely have to. So there are ways with funded programs and things you can do this with these days, where you have your own capital that can just accrue, and then you can be earning month to month from funded. I think that's a better way. Still, the more money you have, the more money you can make.
Yeah. So stay in the game long term. Don't think short term at all. Now, another question. So if you could go back to when you first started, what's one mistake you would avoid and one thing you would do sooner?
What would I avoid? Yeah, system hopping early on was probably one of my problems in the very early days. So I was in the days before we had all these kind of online educational resources. So I was learning from a book, right? John J. Murphy's Technical Analysis of Financial Markets was kind of my Bible. And in there are 25, 30 different strategies that you can apply. So I was learning about these, and the way that he described them, I'd recommend anyone to read that book. It is excellent as an intro to technical analysis. But I was trying things, seeing it work for a while, seeing it not for a bit, on to the next one. Seeing it work for a while, seeing it not, on to the next one. This has probably helped me as a teacher, because I've been around the houses a little bit with trading. But as a trader, it held me back from making progress, because every system can work, in my opinion, so long as you have a good risk management structure and good approach to it. So I think that was one thing that I could have learned sooner. And the other question was, the back follow-up question.
What would you do sooner?
Sooner? Take it a little bit more seriously sooner. I mean, I was young, and this is very common for young traders, right? You earn your money, you go and spend a little bit. I would probably have been a little bit more stoic with my early days as a trader. And I would have then had bigger capital to play with more quickly had I been a little bit less frivolous. But you've got to live your life too. So there's a balance. You want to enjoy a little bit of your proceeds. I probably went a little bit early on.
Fair enough. Now, the things that you just mentioned, I think every trader has to go through them. No one can listen to your podcast and listen to somebody else's mistakes and then learn from it, because this exact thing that you said, I think every trader has that phase. If they get to the 10th year mark, that's when or 5 to 10 years, I would say, that's when they get to decide that, whatever I've been doing for the past 5 years haven't been working, I should just stop doing that and just do the exact opposite, which is not system hop, take things seriously, manage my money, manage my expectations, and that is the only key thing that will allow me to get profitability. Yeah,
when you're 5 years in, I think you should probably be there. It's those first two years or so, I think, can be difficult and challenging. And there is no problem testing multiple strategies. But once you have one that you've back tested, forward tested, tested with live money, and it's working, you monitor the data to see when it works, when it doesn't, how it's functioning. But just trade that. No problem testing other strategies in the background on demo or just on back test to see if you can add some different weapons to your artillery. But I think system hopping can slow progress to traders. Literally, RSI divergences can work. I don't think it's the way to trade. It's not the way I trade. But if you trade it for a while, quit, jump on something else after a few months, you'll find it's a habit. Everything in trading is habit creation. If you system hop, start to system hop rather than just tweak, then you might find yourself system hopping 6 months, a year, or longer from then.
Yeah, I personally am extremely guilty of doing the same when I first started, because I was a teenager, emotions were way too high, and it was like, it doesn't work, onto the next. And that's exactly what happened for the first 2, 3, 4, 5 years. So now I would say, I'm kind of like settling now and just sticking to one and tweaking, like you said. If it doesn't work in certain market conditions, we can see how you can refine it. And that's exactly what everyone who's watching and they're in their year 2, 3, 4, even 5 should actually take this advice and run with it.
Yeah, I think it's a really, really good one to try and avoid. Just to make that quicker progress. We want to get there as quickly as possible, right? But let's just get there walking, not sprinting.
Absolutely. Now it's the last question. It's been a pleasure asking you the question, getting all the insightful answers as well. Final question to you is, if you had to bet on one big opportunity in the next few years, what would it be? No typical answers.
Bond trading. I think in a world of higher interest rates, higher for longer interest rates, we're in a world where bond volatility is going to be significantly greater than it has been for the whole of my trading journey, right? Pretty much from 2008 and 08, 09, interest rates have been, certainly in the UK, until this move, basically zero. So trading bonds has not been that easy to do. There's not been a huge amount of volatility, but with our interest rates now up in the UK, as of yesterday at 4%, there's a lot of opportunity for volatility in here. So I think bond trading is not frowned upon, but it's overlooked by a lot of traders.
It's not fancy.
No, but the bond traders in the 80s were, 70s and 80s were doing incredible things. Yeah. And now the interest rates are kind of look to me at least to be established. I don't think we'll see 0% interest rates again for the next 10 years, or close to it in the developed markets. So yeah, I think bond trading could be at a really interesting place.
Yeah, like you said, it's extremely overlooked. No one even consider looking at bond trading or interest rates or anything of that sort.
Yeah, I would say, just as a note on this, probably want to trade futures if you're trading bonds. A lot of the retail platforms charge prohibitive spreads on bonds, so if you do want to have a go at bond trading, unless you're swinging, I find that a little bit harder with that market. It's possible, but if you're day trading bonds, you probably need to be in futures.
Where could people go to learn how to trade bonds? Do they reach out to you?
Yeah, we teach bonds here, FX, commodities, indices, even crypto as well. So we cover a lot of bases. We can. A lot of the systems that I use work well for bonds as they do for commodities and indices as well. So, but that's typically where I trade: S&P, Nasdaq, gold, oil. Where I'm spending a lot of time, a little bit on Bitcoin, day trading. But yeah, bonds too, I think, can be used in the same way.
Right. So you know where to find us. So it's at Educated Trade Instagram, and Chris's Instagram is at @cvolume profile.
That's right.
So if you ever want to get into bond trading, let Chris be your guide. And with that being said, that was our last question for today. Thank you so much, Chris.
Thank you, Victor.
And we'll see you in the next one.